While we wait for the rest of the participants to joining in, please feel free to download the 360TF mobile app and explore its real-time features like live SOFR rates and FX rates, and updates on the latest happenings at 360TF and its solutions. Good evening, ladies and gentlemen. I am Minisvi Madan, and it's a pleasure to welcome you all to Season 2, Episode 1 of the 360TF Business Unplugged series. After a successful run of Season 1, we are excited to kick off a brand new season filled with fresh insights, engaging discussions, and thought provoking conversations. Business Unplugged continues to be a powerful platform that brings together industry leaders from various sectors and regions to explore key business trends and emerging opportunities. In today's episode, we'll be diving into revolutionizing digital banking and finance, the impact of cryptocurrencies and tokenized assets. Before we begin with today's discussion, I would like to introduce our moderator for the session, Binita Shah. Binita Shah is the Global Head of Strategic Alliances and Marketing at 360TF. With a deep expertise in trade finance, product management, and digital transformation, she has been instrumental in driving automation initiatives across various geographies. Passionate about leveraging technology to create smarter financial solutions, Binita focuses on strategizing client centric approaches that enhance efficiency and scalability. We welcome you, ma'am. Joining her, our esteemed guest, Mr. Chirag Sampat, a seasoned finance and treasury executive with over 2 decades of experience in the financial services industry. A chartered accountant and commerce graduate from the University of Mumbai, Chirag currently serves as head of treasury and capital markets at Zand, which is UAE's first fully digital bank. As a core member of Zand's startup team, he played a key role in establishing the bank and now leads treasury operations and financial institution relationships across traditional finance and decentralized finance sectors. His expertise in digital banking, tokenization, and decentralized finance infrastructure positions Zand at the forefront of financial innovation. Previously, he held leadership roles at ABN AMRO, Standard Chartered, and Emirates Investment Bank, driving strategic treasury initiatives. Beyond finance, Chirag is an avid cricketer and hiker, having climbed Mount Kilimanjaro and actively supports refugee children through the Bring Hope Foundation. We welcome you. Before we begin today's conversation, I would like to invite our co founder and CEO, Mr. Vikram Lodha, to share a few words. Vikram is a seasoned banker with deep expertise in trade finance and technology. Vikram is passionate about leveraging technology to transform business processes, and he firmly believes in its potential to provide solutions to today's challenges. Stage is all yours, sir.
Thank you, Minisvi. Chirag, we welcome you once again. This has been a super exciting time for us as we launch our Business Unplugged Season 2. And who other than a banker can understand this? A banker wearing a FI and fintech and treasury hat is the ideal person to be there on the dice. We all welcome you as 360TF family, and I'm really excited about this session. What all things that we will get to hear from you, especially I am reminded of the conversation that we had the other day, which kind of triggered a thought that why don't we listen to this aspect a little more, and our audience should also get a flavor of it, where you spoke about the entire landscape that you're building. When you're tying up with multiple fintechs in your journey for the payment side, on the FX side, and more importantly, the phrase that you mentioned, that we're a bank, Vikram, but we function like a fintech. Uh, that kind of excited me, and I was all year that day also, and today also. I'll be an avid listener to what's coming from your side. And without a much ado, I'll pass it on to Binita, to kickstart this session. Thank you, and we welcome you once again.
Thanks, Vikram. And thanks, Manasvi, for your kind words. Really appreciate that. And once again, a warm welcome to Chirag, and everyone joining us online. Like Vikram mentioned, the season 2 of Business Unplugged is kicking off at with a very interesting topic that we have it in hand. It covers two important stakeholders of our financing industry. One side is the FI and the bank, and on the other side, the corporates. Uh, all the major economies and the central banks have a very key focus on this area and deep interest, basically. And as of 2025, if I have to particularly speak about the UAE, they has been progressively working on this piece on various fronts, including launching of FITP and open banking. Diving in to this, the financial landscape is transforming rapidly, and digital assets are increasingly becoming very important part of the banking ecosystem. We've seen UAE taking very proactive steps on this. Uh, uh, from your perspective, Chirag, if we have to kind of dive into this, how has the digital assets and the digital currency, particularly, they've been working on this piece from the lens and spreading the landscape. How have they developed over the past few years? And what are the key trends that are emerging out of this trend?
Sure. First of all, thank you very much for having me, the entire 360 team, Vikram, Binita, my good friend, Pankaj Munda as well. So thank you very much for having me here, and Ramadan Kareem to everyone, also our audiences. So diving into your question, Binita, yes, this is very much a hot topic, especially in the banking, in the financial services field at the moment. And we've reached here with a lot of excitement that has been carried over the past few years. Uh, Taking a step back, blockchain, and we've been hearing blockchain, and UAE has been at the forefront of it in terms of adopting blockchain technology and having a strategy for blockchain from 2016, where it was adopted more not in the financial services but in healthcare and real estate sector as well to some extent. And from there, the vision was very clear in terms of digitizing digitization, as well as promoting UAE as one of the pioneers in the blockchain and digital assets space as well. So over the years, a lot of hard work, and the regulators have put in right from the top. All the regulators have come together to bring in a landscape where there is a level playing field, and which is something where globally UAE can not only participate in the trade but also lead to a large extent. So over the years, this has progressed quite a bit. Today, as we see where we are, the landscape is very much here, where most of the global players are looking to come and set up their businesses in UAE, and this has happened because of the good regulations that have come in. WARA has been set up over the last couple of years, which is a specific regulator for virtual assets and digital assets, which is driven in a lot of interest from a lot of global companies to come and set up their businesses. That not only brings in a lot of attention to UAE, but also, generates a lot of jobs, as well as, promotes trade overall between UAE and other countries as well. Along with that, there is also, the ADGM has also the FSRA, the regulator there has also, issued guidelines on digital assets, etc. So that has also, helping bring in more, cohesiveness between the local regulations and the global regulations, which is in a way driving lot more interest here. And this is slowly becoming mainstream. And the accessibility to digital assets is now becoming much more easier. It is slowly becoming part and parcel of, day-to-day life, not only for companies, but also for, individuals as well.
That's very interesting, and I don't know, it's very nice to know about this. So, in great perspective, I would say. So, on how the digital assets are reshaping the banking, you've kind of clearly covered that piece. And of course, one of the critical factors, as you mentioned, is the regulation, which plays an important role in ensuring both security and widespread adoption. UAE has set up a very ambitious goal of digitizing 50% of their transactions using blockchain or the digital technology by 2031, which shows a very strong commitment to fostering a digital economy. How do you see the regulatory framework supporting and accelerating the adoption of the digital assets in banking further?
So, this regulations is a key, because without that, also, see, it has been a well-known fact that digital assets for a long time were considered, not part of mainstream. The only way to, bring it into mainstream and, have wider and mass adoption is by having, acceptance at the highest level, and which comes through regulations, where, governments and different regulators adopt it, and they bring in the guidelines in terms of how it can be, used, and what are the permitted activities that can be done, and who can do it, and who are the participants that can participate in it. Once this is clear, same like banks, right? I mean, not anybody and everybody can become a bank. So because it's regulated, it has a trust element, and, people are happy to keep their money with banks. That is the same, way if we translate it into this DeFi economy, which is being built through digital assets, where, regulation is picking up across the board. UAE, like I said, has come up with its own set of regulations through WARA and ADGM, but also DIFC has its own set of regulations. ESCA, which is another regulator in UAE, has also brought in the digital assets regulations, more so in terms of adoption of how these can be, used by institutions like banks and fintechs in terms of offering products and services in the digital asset space to, clients, ultimate clients. Europe has the same thing. Europe has come up with MiCA regulations. Same is with, Singapore, Hong Kong as well, in China as well. There are, regulations coming up. The latest being once Trump was elected, there he was being very vocal in this aspect in terms of digital assets adoption. He went to the extent of saying that these could be part of the US reserves as well, the top 5 cryptocurrencies. So slowly there is very much awareness is there, and as well as along with that, the regulation are helping strengthen the trust element in it, which is helping not only the digital asset companies, but also businesses are now looking at how they can participate, in this ecosystem, and how they can use that their advantage in terms of, overcoming some of the issues that they have in the traditional finance business, where especially in the form of payments, or in the form of investments or settlements. So there's a lot of good use cases where blockchain as a technology, along with a collaboration of the digital assets or cryptocurrencies, together, a combination of these two can help solve a lot more problems, then but there are downsides to it as well. It has there is cybersecurity issue, so there's always a chance of uh, hackers hacking something, and we've
Sure.
had cases in the past where large sums have been hacked. So there is definitely a heightened cybersecurity element that has to be considered in this aspect. And also, the other side of it is there is also, this is still in its infancy stage. So overall, there is still a lot of interoperability, issues between different governments or different geographies or different blockchain, platforms where, you cannot seamlessly transact between each other. So these are some of the initial issues relating to the evolution of this, segment. But over a period of time, these will be overcome, and then there is lot more benefits out of this that we can see.
Sure. So slowly but definitely, it's picking up the structure, it's picking up the shape, is
Yeah.
what I gather. And that's encouraging actually. So as digital assets and the digital finance gain its momentum, central banks around the world, as you've kind of touched upon slightly, they're actively exploring the CBDCs. UAE has been making significant strides in this once again, with a key milestone being achieved early last year with completion of their first cross-border transaction using the digital dirham by transferring around AED 50 million to China. Given these advancements, how do you see CBDCs impacting both domestic and even the international banking operations? And in particular, what opportunities or the challenges that you see that the businesses engaged in cross-border trade can experience as a result of this shift?
So, so, uh, so CBDCs have been, issued by a lot of governments. So normally CBDCs are issued by governments or the central banks of different countries, right? And this
Correct.
is purely to promote trade via blockchain. And so based on the example that you gave between UAE and China, similarly, there have been transactions done with UAE and Saudi Arabia as well. And there are other examples of CBDC transactions globally as well. Um, the the way this is progressing is that it shows more of a the governments and the central banks want to showcase that using blockchain uh, and the CBDCs, this can help in uh, swift and faster settlements for cross-border transactions. It has a lot of benefits associated with it. It's much faster. It's on the blockchain, so it's seamless in terms of transacting. It's very quick. There is no ambiguity in terms of uh, delays, and the record keeping is perfect. So there are a lot of advantages in terms of what a blockchain technology combined with the CBDC, brings in. But along with that, the adoption for CBDCs has been a bit slow globally, because again, this is more based on government to government or related transactions. However, if we look at um, other side of it, where we look at stable coins, which is part of, you can consider it as part of cryptocurrencies, but these are backed by actual fiat currency. So if we talk about dollar stable coins or euro stable coins, these are actually backed by the actual currency behind it, and these don't fluctuate. The adoption of stable coins has increased tremendously over the past 5 years, and these have becoming more and more useful in day-to-day trade, especially in developing countries, especially in Africa. If we may pick up an example where dollar is the main trade settlement currency. However, dollar is always scarce, and which is where a lot of businesses are now using, dollar as dollar stable coins as part of their, consideration for their trade settlements. So when we look at the blockchain settlements along with the stable coin, combined with it brings in a lot more efficiency. The customers don't have to look at, the FX risk as such, because it's pegged to dollars in this case. And then, it also brings them to a point where they are able to get the benefit out of, the blockchain technology. So blockchain not only allows seamless settlements, but also it is backed by smart contracts, which also means that it can be programmed in a way where, based on certain events that are happening in case of a supply chain financing, for example, right? Where, there are certain events that happen, and based on that, a payment has to be done. Typically, that payment would take, maybe between 3 to 7 days or maybe longer for it to be initiated after the milestone is achieved. But in case of a blockchain based payment where a smart contract is programmed, that particular payment can be triggered immediately and received immediately, once that particular event is happened. So, there are a lot of benefits of this in terms of how it can be adopted. Likewise, UAE is also now looking at, bringing up a dirham stable coin in the country. A regulation was issued last year. And then currently there are, institutions that are applying for the license. So very soon during this year, we will start looking at dirham stable coin as well, which will then, can be used like a payment token, which can be, used to even buy groceries by individuals, or you can use it as part of your contractual obligations and make payments over the blockchain.
Oh, that's again interesting. So basically, CBDCs or the digital currencies are not they're transforming the financial landscape, is what I kind of gather. And one area rightly pointed out by you, where we see the shift is particularly noticeable in the cross-border payment piece, which have long been complex and often a costly process. Uh, we ask any no corporates, you will perhaps hear the sentiments even from them. And no cross-border transactions are becoming faster because of these kind of implementation. Uh, Again, how do you particularly, want to know if we have to pick up the online payment rails or the cryptocurrencies as part of it, creating a fully digital payment rail for an international trade? How is it, kind of getting implemented from a use case perspective from a cross-border trade transaction? And what role do FIs particularly play in this whole scheme of things?
So end-to-end digital payment rails, are today happening in two forms. One is in the traditional finance world where, where banks operate, and another is in the DeFi world where, this is based on the digital assets and the blockchain. I'll just speak about both, just for 2 minutes. But so
Sure.
in the end-to-end online payment rail, which enables quick and fast remittances, can be achieved by currently is available and can be achieved by, a few things that has to be in place. It's all technology driven, of course. Yeah, but it requires, I mean, the steps that typically would be required are, you need a, a electronic onboarding or a, eKYC or something that requires to be done. And we have
Mm.
platforms we've seen, like even in UAE, and other places as well, like in India as well. We've seen there are eKYC platforms now where, clients can, get onboarded quickly. Even corporates can get onboarded quickly through online channels. It doesn't take time to get onboarded onto a bank or a platform. Once that is done, then it goes on to another process of, you know, getting the funds in. Once the funds are in, which is again nowadays, most of the geographies have internal fast payments. Even in UAE, we have the FTS, IPI, which are quick,
Mm.
fast remittances. Along with that, banks and FIs typically are now establishing more and more direct connections with their major payment corridors. So, for example, you would have seen, it's not unusual for me, for example, if I have to send funds to India, I can send money back to India, and it will be received in less than 5 minutes. Yeah, and this is a standard service that can be offered. Now, how is this possible, right? For my money to go from my bank account in Dubai to my bank account in India, within 5 minutes. This happens through technology, and which is mostly built around APIs. So the traditional Swift method would typically take time, yeah. But through the API mechanism, where there is, a connectivity between two corridors or two banks, okay, that can help, fasten the process. So once a payment is initiated locally, it goes through, again, electronically. The transaction is screened, like every transaction is. It goes through a API, to the receiving bank, and then that bank process it through the local payment system, and that is how we are able to achieve, payment in 5 minutes. The same process, is done in the DeFi world as well, but there it is wallet to wallet. And there it is, of course, in DeFi world, there are no intermediaries. So it is always going to be a wallet to wallet transfer. Yeah. And this is going to be seamless, unless there is a FX involved, which may take, a few more seconds as such, but otherwise it's going to be very seamless as well. In the traditional business, this online payment, processing capability is more and more gathering steam. And now banks are not only collaborating with other banks, but there are a lot of fintechs, especially payment-related fintechs, that are also coming into this space, who are using a combination of the APIs that I discussed, along with, blockchain in the middle, in terms of doing the last mile delivery. So, if today UAE is very much in the middle of the heart of the business, and then it has, collaborations and payments are being sent globally from here. So for a bank from here to be able to send money also to Australia, as well as to Canada or to Finland, okay, and, in the extremities of the world, with the time differences and, all that taking into account, it can sometimes take a long time,
Sure.
right? But with
Yeah.
the technology that is available today, uh, with the right investment in the infrastructure that is being done by a lot of banks and fintechs today, this is possible for you to transact and send money any time of the day, and it can be received there, very quickly as well. So this is being done throughout the banking and FI system. Some are ahead, some are behind. A lot of the newcomers, digital banks, are, creating their whole infrastructure with the latest modern technology available. So that helps them to, bring in these efficiencies much faster. Some of the banks, the legacy banks, are investing, but it is taking them time to turn around and, bring in. But I think everybody wants to be there. Everybody
Sure.
wants to bring in faster payments, quicker payments, and cheaper payments. Yeah, so this is definitely what everybody wants to achieve.
So basically, then, as more businesses embrace digital payment solutions, ensuring accessibility, and that would come, I think, as more and more banks and more players would come in. And the other side of thing, which is going to be important, is putting in the efficiency. So accessibility and efficiency both is going to be very critical, is what I understand. And that would be key specifically for SMEs and trade participants operating in the global scale. Uh, Playing that piece. No, and UAE has been actively integrating, no, just taking this little ahead, UAE has been actively integrating IoT and AI into its smart city initiatives to optimize logistics and operations. with these advancements in mind, how can digital payment solutions be embedded into the supply chain systems to again improve the efficiency and transparency? Do we see that these two solutions, which are again very important, they run parallelly, and if not, they kind of merged and embedded, it will bring the whole new solution for the industry. Now, what's your
Yeah, I
take
mean,
on that, and how would it improve?
this is it is like different ingredients for the perfect recipe, right? That we all want. So Internet of Things, AI, blockchain, digital assets, these all collectively in different shapes and forms, in different combinations, are being used for different use cases, yeah, globally.
Hmm, hmm,
So,
sure.
so if we take, individual use cases, like, for example, a supply chain payment for, let's take an example here, like, a port operator, okay, who has to make payments to different, you know, uh, merchants who are exporting and importing, right? And they
Hmm,
have to collect as well as receive payments, and there's always a delay in payments, etc. Now they could use AI in terms of understanding, how the particular history of different importers and exporters. They could use large databases in terms of in through even ChatGPT nowadays is going to be used a lot in terms of going through large databases to address pointed questions and get quick answers around it. So even this port operator who has to make payments, etc., they can have all the entire ecosystem if they have it on a
hmm,
blockchain, yeah, rather than sending individual payments through the traditional banking channels. If everybody is on the blockchain, it becomes very seamless for them to execute not only receipts and payments, but also to bring in transparency in terms of what is being done, where each of the particular transaction is, and in which in the life cycle of that supply chain, who is supposed to pay what and when was it paid. So, all that is ultimately recorded on the blockchain. It's transparent and it's very quick to disseminate the payments, in terms of, and also it's beneficial for the ultimate, corporates as well, because if they are supposed to receive payments, today and they get it a week later, it's affecting their, business, affects their working capital requirements, and, just lengthens their period of, receivables. But otherwise, if on the blockchain, if everybody is on the blockchain, then it just helps everybody, all the players. And there are live examples here, including in UAE, where these kind of projects are happening on the blockchain, where the payments are being used to in as part of the supply chain finance process, where they can easily be shortening the whole life cycle of the supply chain finance, at least by 25 to 30%.
so we're moving towards a seamless way of working,
Yes.
basically.
Yeah.
That's fantastic. Uh, Now, as we move little ahead of the payment piece, another exciting development that which all of us been hearing around is the rise of the asset tokenization, which is gaining traction globally, including the individual investors, basically. So, by converting the real world assets into the digital tokens, businesses and investors are, they have unlocked a whole new opportunity for liquidating their assets and also market accessibility. So, how do you see tokenization influencing the cross border investments, and what impact it could have on the financial markets in long run?
So again, tokenization is relatively new, if you may call it, compared to cryptocurrencies, because this is something that has come up in the past few years, but it's very simple to understand. Tokenization
Sure.
is nothing but transferring ownership rights onto a token, right? And so the bearer of that token, enjoys the benefits of owning of that particular asset. Now, that particular asset could be anything. Today, it's possible to tokenize real world assets, real estate, cars, yachts, diamonds. You can also tokenize financial assets. We've seen, tokenized bonds being issued. We have seen tokenized equities being issued. So which allows them, the issuer to fractionalize those financial assets as well. And, it can be uh, the the accessibility to individual investors can increase based on that. Yeah. Also, there are
Mm.
benefits of tokenization where in terms of distribution of, the income from that particular asset is much easier, is faster, because the record is always updated in terms of who are the owners of those tokens, and the distribution is through blockchain. So, there is no latency, there is no delay in terms of distribution of income as well. And transferability is also easy. You can
Sure.
transact at any point in time, even on a holiday or, off hours. If you're looking to sell something that you own, and you have a buyer, it can be transacted seamlessly. You don't have to, go through, the normal operating hours and the weekday concept for, the non-tokenized assets. So there are a lot of benefits out of this. Um, and this is increasingly being adopted now, and it's trying to become, slowly coming into the mainstream. Even UAE, there has been also projects even at the government level where, the land department is also trying to, work on a pilot tokenization project for real estate, where they can, have assets tokenized for in Dubai in terms of real estate. And there are other tokenization examples also that are happening. So this is slowly, becoming more acceptable. Now, how
Sure.
that helps in cross-border trade? Typically, we have seen that there are sometimes challenges in terms of, cross-border investments, especially where
Mm.
where the investors have uh, to either physically travel to make certain investments. There's a lot of legal paperwork that happens, which is sometimes a lot more tedious than you would expect. Also, there are, payments in terms of fees and all that have to be done in terms of, doing proper title transfers, etc. So
Sure.
these are some of the challenges that are there today. In the tokenized form, an investor could invest sitting anywhere. Yeah. He could sign a smart contract digitally. Yeah. Sitting, wherever they are, and they could complete that transaction, pay the fees digitally through the digital assets. And all this could be done seamlessly in a very short span of time, without them, having to physically travel. And so a transaction which could take, a week to close can actually close in less than a day, right? So if everything is in order. So these are a lot of advantages in the tokenization side of things.
Do you see security as one of the challenge from the adoption perspective? Can that be
Yeah, I mean, security is a constant challenge, cybersecurity as such, especially when we are talking on anything in the digital assets or the DeFi space. In so decentralized space, cybersecurity is the biggest threat, and um, there is a lot of work that is being done to overcome that. And even financial institutions and all the digital assets companies in fintechs or the digital assets company who are in this space, they are investing a lot in terms of ensuring that the blockchain is secured.
sure?
And there are always checks and balances put in place
Mm.
to ensure that the assets that are there are secured, the custody of those assets are well protected. So that is why a lot of large institutional clients of ours as well, and what I've seen, they would not always keep their digital assets, whether in the tokenized real world assets or even normal digital assets. They would keep it in cold wallets, and not keep it in warm wallets, which are more susceptible to attacks. um,
Sure.
so yeah, there is that risk for sure. But then the same risk is also there in your bank account being hacked or you being scammed by a scammer, right?
Yes, yes,
So that
pretty much.
risk is there in both aspects, in the TradeFi and the DeFi as well. Yes, but what we've seen in the past is a lot of um, uh, hackers, if I may say, are targeting the digital asset space much more, and the volumes
Hmm,
and the values are much higher that we have seen. But as we evolve and as a lot of investment is being done in this space, uh, we obviously will see the standard of security, improving significantly.
sure.
Yeah, and that is how slowly, it will be more secured.
Yeah. So it's a journey which we all
Absolutely.
have to take.
Yeah.
So no, but tokenization is definitely reshaping the way the investments could be done. The accessibility, like you said, is and no, I am no more now restricted to a specific area, geography, which is very encouraging. Uh, no, so if we kind of reflect on what we've discussed so far. So now we've discussed how the whole digital finance landscape is progressing. So many changes coming in, blockchains, tokenization, cross-border trade payments getting smoother with solutions like embedded finance and all. So, there are various things happening in this segment altogether. Lot of noise, lot of activities being happening. Uh, what do you see as the biggest opportunity in the digital banking space? And how can businesses and investors position themselves to take full advantage of this emerging trends? Because we are at the start of it now, is what I feel.
Yeah, I mean, see, technology is always benefited all of us. Yeah, we all today use technology in all aspects of our life, right? And
Yeah.
this evolution that we've been discussing uh, is also in its, like you said, it's early days, and the quicker companies adopt it, the better it is going to be for them. So,
Mm.
today, if we are talking about how a company can, take advantage of this, my personal recommendation would be, start looking at what your problems are today and where your pain points are, and what kind of technology is available, because most likely what your pain points are somebody else also has the same pain points, and someone else has found a solution in terms of how to overcome those pain points. And it's just about, for you to figure out how to collaborate with that particular person or that particular entity, which I'm referring to as, in terms of fintech. So today, nowadays,
Mm.
fintechs and fintech platforms are bridging the gap between banks and small companies, especially who don't have a lot of capital to put to invest into technology, etc. You don't need to invest a lot. You just need to collaborate with a fintech who is providing, a solution that will help you maybe transact on the blockchain, or you become part of overall supply chain financing proposition, that will streamline your payments, your working capital financing. So there are different avenues available where you don't need to invest a lot. It's just about getting on board with
Yeah,
this new technology. So my
correct.
suggestion is start looking for solutions for your problems. I'm pretty sure you will find more than one provider for your pain points, if I may put it that way. And then once you
Mm.
find them, try it out. There's you will have to invest a bit in terms of
Sure.
getting onto the platforms, etc. But then in the mid to long tenor, you will always reap the benefits, and it is going to be much better, and you will be ahead of the curve in terms of being the initial adopter of the technology. You will start looking at the benefits, and you will start using that more into your business, day-to-day business. So the sooner you adopt and be part of the technology is going to benefit
Mm.
your business.
Yeah. So it's like grace the change, grace the technology coming on
Yeah.
your way to
Yeah.
take the benefit of it. So it's an exciting time for the industry, and possibilities ahead are vast. With you on that take, Chirag. With this, no, thanks for sharing your insights. It was wonderful discussing. Like I said, no, we've covered various topics on the financial landscape. Of course, there is a lot more that is coming our way.
Yeah.
We just keep our eyes open, embrace the technology that is coming our way, embrace the change is what my key takeaway from today's discussion is. Um, with this, no, I would bring in Vikram. Vikram, would you like to add anything to this perhaps, or no, reflect to our discussion?
As I said at the start, I was listening with awe, and the entire remittance piece that you spoke about, the entire blockchain piece that you brought in. In fact, I got a message in between from a friend. He runs a tech company, and he said, "Vikram, I see you guys are getting interested in blockchain, and let's chat one-on-one." That's the kind of response, and the industry is looking forward to so many things. And I can tell you, Chirag, from the client side, today when I go back in time, and when we got the front end of the banking, where clients could dial remittances, could dial LCs, BGs, it was a wow factor.
Yeah.
Today it's a given, you need to
Yes.
have that, right?
Right.
I've seen the transformation on the client side. Today, if you talk to a client at length on some of these aspects, be it blockchain, be it adoption, and completely newer things, which
Yeah.
are still being read in the newspaper, and then straight away take it to a conversation, and people are willing to discuss that at length, and also be a part of those POCs and try it out. So the mindset is changing pretty fast. And my take on all this is, if the adoption since the time of the front end, banks came up with front end, probably the adoption was good 10 years. The next level of adoption would be much faster. Every 2-3 years, we'll have a different, set of activities being done, and people getting used to it.
Yeah.
Exciting times is what I can say.
Yeah. Change is the only constant, right? So yeah.
Absolutely.
True.
Absolutely. So I believe Banasvi has some questions by her side as well. Banasvi, want to
Yes.
pose them to Chirag?
Yes. First
Sure.
of all, thank you, Binita. Thank you, Chirag, for sharing the expertise with us and the industry insights. Let's dive into the questions that was submitted by our audience. First question for you will be: how can regulators ensure seamless CBDC transactions while aligning data protection and trade laws across both jurisdictions? Example, for UAE India trade, if an Indian exporter receives payment in CBDC INR from a UAE importer using CBDC AED, compliance challenges arise due to differing regulations. India's RBI's mandates data localization, while UAE's DIFC and ADGM allow cross border transfers with safeguards.
Yeah, so very excellent question. And this is what I briefly also touched upon when we were talking about the challenges for deep CBDC, right? So there is definitely the interoperability challenge that comes whenever we do cross-border, because it has to be the you have to align on the laws, not only on at the government level in terms of import exporting or whatever goods and services you're transacting, but also the confidentiality, the privacy, the customer information, all those data information. So there is still a lot of work to be done in terms of aligning these, aspects, and which is one of the current challenges, and which is why CBDC transactions are not very well known and not, widely used. Yeah. So this is an ongoing challenge. Unfortunately, I don't have a specific answer for this, but this is I accept this is a definitely a challenge, ongoing challenge, and the only way that it'll work is where different governments are collaborating, especially like, for example, India and UAE. If we take, or India and China, or in India and the BRICS countries altogether, if you consider them, they are coming up with their own trade pacts, where they are aligning what commodities or where trade they want to, do trade with amongst themselves. And with that comes in the ease of regulations, or where they allow, how transactions could happen. So that is essential in terms of high level government collaboration before, these things can be operationalized. So this is more of a bringing in efficiency at the operational level. But in terms of where the regulatory aspects are still clashing, or they're not, you know, they haven't come to a common term, then this will definitely not be useful at the moment.
Thank you. Moving forward to next question. What are the key factors that influence consumer trust and drive the adoption of digital banking solutions that involves cryptocurrencies and blockchain?
Um, so there's a simple answer to this. It comes through regulation, right? Today, customers have trust in banks because they're all regulated. They understand that because of it being regulated, there is a high level of compliance elements with that institution. They abide by the rules and regulations, and there is a safeguarding element that is comes along with when you say it's the funds are with a bank. You have a trust and you understand that your money is safe. Same thing, and this has come after centuries of banks being there, right? So with this new industry, along with the regulations coming in, there is much more trust. Today, if you have two avenues of investing in crypto, okay, one is a regulated platform and other one is not. As a common consumer, you would definitely go with a regulated platform that gives you naturally the trust element is there, right? And the way of conducting business by a regulated institution is much better than an unregulated institution, because you don't know how they are going about their business. So which is why regulations is a key, and which is evolving globally. Regulations are coming out in the past 5 years. If we may see, a lot of the countries have come up with their own regulations, adopting this at different levels. Some are ahead, some are still in the early stages. But slowly and gradually, as regulations mature, that more and more trust will come into this, and then it will become like today it is for banks.
Okay. So the next question is, how are banks leveraging AI and blockchain together to enhance digital finance services?
That is a very big topic at the moment, and currently evolving very fast. So today banks are already using AI a lot, including at our bank, and all banks that are, at least in UAE, are trying to use it in some shape or form, especially on the understanding of the client behavior, or doing AML, KYC on the clients, etc. AI is a powerful tool which can uh, get you information which normally would take longer for humans, or if you have to go to multiple systems to do various checks for a particular client or a particular transaction. AI it just speeds it up many folds, and it is definitely something that is being used today. Blockchain is used also by banks today, in limited use cases, They are being widely used in payment space. They are slowly banks are using blockchain also in supply chain financing or in the lending space as well. Yeah. But there is not much more beyond that that is widely used, at least not here in UAE. But there is a lot more that will evolve as time goes by, where with because AI is still new and everybody is still trying to figure out what all can it do or what all can it make better or faster. Yeah, so as the adoption and people start understanding how to use it efficiently, the use cases and the real world adoption will increase more.
Sure. I think the tailing question actually kind of is half addressed by Chirag, because the question there is also, how does the fraud in factoring, you can kind of correct or fix that piece. But you kind of covered that. Manasvi, I think we can take now one question.
Yes.
Yeah.
So, our next question is, how do you see the continuous breakthroughs of quantum computing impacting the security, scalability, and overall evolution of cryptocurrencies and tokenized assets in the digital banking and finance sector?
Okay, that's a long question.
Yeah,
So can you repeat it for me, please, again?
basically
Yes.
quantum computing impacting these aspects.
Okay.
Yeah,
Quantum computing impacting the
aspects of
digital asset.
security, scalability, and overall evolution of cryptocurrencies.
Um, I honestly don't have the right answer for this. I'm not a quantum computing expert, but if I had to, put in my best effort on this, uh, again, like anything else, I would say this is quantum computing is nothing but you know um, advanced computing capability for day-to-day use cases. If we look at it that way, uh, this is only going to be useful and beneficial. The challenge is it takes in a lot of resources. It takes in a lot of energy consumption. So from an ESG point of view, that is not what is widely used in terms of because quantum computing takes in a lot of energy and resources for it to actually produce results. Maybe in the coming years, the AI technology is going to be far more better than what is the erstwhile quantum computing technology which was being used, which used to take a lot of effort. But for sure, it can be used and will be used in the most beneficial terms for digital assets and tokenization.
Yeah,
Sure.
we want to go for one more. I see one interesting question
Sure.
Yeah.
from Mr. Yogesh.
Yes.
Yeah, Manasvi.
So, our next question is, what impact would it bring in a scenario where central bank of each country comes up with their own digital currency, managing cross-border payment, and would this scenario jeopardize the current crypto coin-based trade?
No. So uh, today people don't use cryptocurrencies specifically in trades. Most of the people would use stable coins for trade related matters because there you don't not having the volatility of the crypto asset there. It's like hedging your FX risk, right? So typically, even if each country has its own cryptocurrency, so its own digital currency, it is like having electronic dirham or electronic INR or electronic CNY, right? It's digital fiat currency. That is what will result into cross-border payments. It is not going to jeopardize the crypto coin-based trade. According to me, my understanding is crypto-based trade business is not much, so it's not going to impact that a lot.
Interesting.
Yeah. So this comes to an end to a session, and really thankful to Miss Binita and Chirag for giving us the expertise and sharing the insights of the industry. So with that, get ready for the second episode of season 2 of our Business Unplugged series featuring Deepa Sinha. Mark your calendars for April 25th, same time, same place. We'll see you there. And thank you, everyone who
Thank
all
you.
have joined us for today's session. Thank you so much.
Thank you,
Thanks, thanks,
Chirag.
Thank you.
thanks,
Thank you very
Chirag.
much. Thank you.
We still having questions flowing to us. I think we're going to put it to you and
Sure.
get the answers and maybe circle back to the audience.
Definitely, yeah.
We have our LinkedIn audience also posting some. We'll share those as well. Thanks
All
once
right.
again, Chirag. Thanks for your time, and look forward to continue our discussions. Take care.
Definitely. Thank you very much.
Thank
Thank
you
you for
so
having
much,
Thank
me.
you.
everyone. Thank you.
Bye-bye.